Hey, welcome back. It's Jason Walter here. Is the housing market in the US slowing down? I'm seeing more and more data to help support the fact that maybe, just maybe, housing demand may be slowing down. So in today's housing market update, I'm going to be sharing what I'm personally seeing. So if you're thinking about buying or selling a house, it's my hopes you're getting some more insight about what's currently going on with our housing market today. And if you get any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Also, if you're thinking about buying or selling a house anywhere in the US, then go to homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. Okay, with that said, let's begin today's video with some stats to share about why the housing market may be cooling off. First of all, the US Census Bureau reported yesterday that sales of brand new houses actually decreased much more than expected. In addition, sales of new houses have now dropped for 2 consecutive months. New home sales have now fallen to the slowest pace in a year, and the street was also expecting a 0.5% drop in sales, but it was actually much worse than that. This is because the US Census Bureau reported that sales of new houses actually dropped 5.9% in May compared with the previous month. Plus, I noticed that the drop of sales would have been a lot greater if the Northeast region didn't skyrocket. So let me explain. In the Northeast, new home sales skyrocketed a whopping 33.3% in May, whereas the Midwest was flat, the South decreased by 14.5%, and the West only increased by 7%. Regardless if you're looking to buy a new house or not, new home sales is actually a crucial indicator of where a housing market is headed, and let me explain. This is because a new home sale really acts like a pending home sale. So a new home sale is defined as a deposit taken or sales agreement signed between the builder and home buyer. Therefore, if fewer contracts are signed to buy brand new houses, this could be an indication that home buyer demand is waning. Let's have a closer look at this report from the US Census Bureau, because another factor that's at play here in order to gain an understanding about whether or not our housing market is cooling off or not is housing inventory. The Mortgage News Daily reported yesterday that new home sales reached a 12-month low despite a rise of housing inventory. The US Census Bureau also reported that the total number of new homes for sale, in other words, housing inventory of brand new houses, as of the end of May actually increased 4.8% compared with April. And I know you may be thinking, Jason, this is just 1 month. Who the heck cares, right? Well, check this out, because I was analyzing this report for you guys, and here's what I found to be very, very surprising. When I was looking at the total number of new houses for sale over the last year, I noticed that housing inventory has increased for 7 straight months. Ever since November 2020, inventory has been increasing every single month. At the end of November 2020, there were 290,000 new houses for sale. Now that has increased to 330,000 houses as of the end of May of this year. If housing inventory has been increasing for 7 straight months, could this mean that home buyer demand is decreasing? Well, it could be, but have a look at this. I don't want to give you misinformation though, so I actually looked up on the US Census Bureau's website about how they defined a home for sale. So it says the following on their website. A house is considered to be for sale when it's being built to be sold and a permit to build has been issued, or, and here's a key word here, or work has begun on footings or foundation and a sales contract has not yet been signed nor a deposit accepted. So in other words, a new home in a brand new home development could be considered for sale even before construction begins. This actually makes sense because when you visit a brand new home development and visit the sales office, you often put a deposit down for a dirt lot. Then the builder builds the house 4 to 9 months later. However, it's been reported that builders are pouring foundations for new houses but not starting construction of them. Some builders are doing this because the cost of building materials is actually through the roof, and it's actually been very volatile, the prices have been. In addition, builders are still experiencing delays in getting materials to their building sites. So perhaps the increase of housing inventory of brand new houses could potentially be a byproduct, or at least a part of this, from builders who are opting to pour foundations and not start construction of their new houses, even though the US Census Bureau reports that as a home for sale. This actually coincides with the video I made the other day about housing construction. And in that video, I reported that new single-family houses authorized but not yet started have increased every single month so far this year. What this basically means is that builders are getting authorization to build houses from the city or county, but they're opting not to start construction of the house. And rather than list these houses for sale, some builders are opting to wait it out until construction material prices stabilize. This could be one reason why housing inventory is increasing, but perhaps home buyers are getting sick of high home prices as well. For example, the median sold price in the US for a new house rose 18% from last year, and the average sales price reached $431,000 in May. On top of this, the Census Bureau reported that the month's supply of brand new houses increased a significant amount, 10.9% in May to 5.1 months. What this means is that at the current sales pace of brand new houses, all houses listed for sale would be sold in 5.1 months. This is much higher than the 3.6 month figure from January of this year, and a housing supply of approximately 5 months is considered a balanced real estate market. In addition, and as I mentioned in my video the other day, sales of existing houses have also started to decrease. This is because the National Association of Realtors, or NAR, reported that home sales of existing houses have declined for 4 straight months. On top of this, housing inventory of existing houses, meaning not brand new houses, has been increasing for the past 3 months in a row. An increase of housing inventory plus a decrease of home sales is a good sign for home buyers looking to potentially buy a house. But don't expect a huge discount anytime soon because home prices are still at record high levels. Looking into the future though, if home sales continue to slip and inventory continues to increase, then perhaps there's some relief on the way for home buyers. Time will tell. Another positive trend for home buyers is that lumber prices have continued to fall. They dropped below $900 yesterday for the first time since mid-March of this year. Ruben Gonzalez, who's the chief economist of Keller Williams, stated the following: "The fall of lumber prices was good news across the housing industry. We have hopefully moved past peak lumber prices, and builders will be able to feel more confident putting their product on the market with less uncertainty about costs." Yet another leading indicator of our housing market is the total number of showings by realtors for houses for sale. The National Association of Realtors posts a monthly report about the number of realtor showings for houses for sale, and they actually just posted May's results. In this report, they announced that showings remained unchanged on a month-to-month basis in May. I'll definitely keep you posted regarding this because if the number of showings decrease drastically, this could demonstrate that fewer buyers are interested in buying a house. Something else that you should be aware of is the fact that mortgage interest rates have been very volatile ever since the Fed's announcement last week. But yesterday's rates actually reached their lowest level in 1 week. According to the Mortgage News Daily, rates are averaging around 3.2% for a 30-year fixed-rate mortgage. That's about 0.2% less than the 52-week high. Meanwhile, the 10-year US Treasury note, which is loosely tied to mortgage interest rates, have been hovering around 1.5% over the last week. If you enjoyed watching this video, then please hit the like button. I greatly appreciate that. And also consider subscribing as well. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.